Right then, we're going to go through the board then, and we're going to look at what is looking good for Friday setups. So with the US dollar, what we're noting here is that the price has come up, or the index has come right up into the 78.6 retracement on that leg, right? So that's a weekly um, leg. Pull that out to the weekly chart. All right, we've also got this neckline of this M formation. We've come up hard into that, and the question is whether that is going to act as resistance. The likelihood is that it will, maintaining the bearish, excuse me, the bearish form on that trend line. So we'll take that off. We've got that noted. That's a 78.6 conversion. Come down onto the daily chart. On the daily chart, on the other hand, we may have a continuation in play. I'm just going to get rid of all of these markings and start fresh. So yeah, depending on what broker you're going to use, this candle here was either bullish or bearish. We'll go with this one because it just makes life easier. So we've had a wrong one. We've had a sizable correction, and that came into the 38.2. On the corrective leg, we've got a target of the 103.14 and 103.52. Comes up in line with thereabouts up in here. So while we're up there, we may as well mark the entire order block up top, which is over here, unmitigated. Okay. So there are still prospects of a continuation to the upside. But let's get to the day count and see if we can identify a scenario where this market could pull back. Right, so that is a bullish trend that is still intact. We've got a swing low down there. So that's just a snapshot of the 4-hour chart then, so front side of this bullish trend. Some signs of deceleration. We're making lower highs as we advance along this bullish trend, potentially coming up to a terminus, but we'll have to see. So let's get down onto the day cycle, 3-day cycle. So this is day 2, aka potential for a continuation. If you note with this week's flow, we've come up and trap traders long of the dollar. We subsequently come down, testing the lows of the week, trapping breakout traders to the downside, and now we've pushed up, squeezed back in, and targeting a move continuation to the upside. So that is a feasible thesis that we're going to take on last week's highs, and as we noted before, we've got a target area up in here for a continuation towards the minus 270. You can barely see it, and the minus 661.8. So somewhere up in here for a test of the 103 handle. So that is the dollar, and therefore we can be pretty much bearish everything else. Now, that is not to say that this is going to simply spike up. What we may get, and the higher probability, is a correction back into longs, retesting this trend line before the continuation to the upside. So where that correction is going to come from, potentially in Asia, starting out offered, and then maybe London and New York to finish strong on the day, perhaps. So no idea what the price action is going to be, the ebbs and flow of the markets, but looking to short versus the US dollar up high or down low, depending on the cross, whether it's inverse or not. Now with gold, we are still front side of this bearish trend. Now we've got our targets down below, eyed last month's lows, and if the dollar is going to be bid, then we're looking for a continuation to the downside. However, we could be getting this correction that seems to be underway as the dollar is being sold off in Asia. We could have a move up into test trendline resistance again, and that could be the journey's end and roll over for a continuation to the downside. As day 2 of the 3-day cycle. This was day 3, so it's day 1 and day 2 continuation. And also to note, there's a price imbalance here which we could be moving up into. Right, moving over to the euro then. So we got our short on Thursday. That was a day 3 move up, and then we got this pump, and then we got a blow off to the downside. It was a day 3 clear out of stops up high. It had stops above the inside day highs, so they cleared out on this rally decisively. Now we've got stops below again, down here as well. So we're looking for a continuation on day 2. Day 3 turns to day 1. So day 1, day 2, continuation to the downside. Now, as this dollar is sold off, let's just take this across, work out like that. So as the dollar is being sold off currently, we could have a move up, testing this counter trend line. Now, note that we didn't break, well, we did, I suppose, yes, we did. This was structure up here on the swing basis, so this is a broken down market. I was going to say that down here remains intact. But this could work out to be a weak low as we've come up, pulled back, those are the highs, spiked up, and crashing down eventually through that level. And we're parking up down here for whatever reason. The support line is irrelevant. Potential resistance on a lower time frame is important structure. In any case, it's broken on the way down. That's support. It might act as resistance on the way up. But we've got this counter trend line that is also broken. So we're in a broken down market. bias is to the downside. Don't know how this is obviously going to play out in terms of price action, but it just gives us a sort of a blueprint to work from. But it looks like we could be coming up, and if we find resistance up here, then coming down into London, maybe London buys it up for a retest with the peak formation again, forming head and shoulders, kind of textbook stuff, and then the capitulation for New York traders as part of the day 2 cycle, day 3-day cycle, day 1, day 2 continuation to the downside. Right, sterling yen is day 3 of the 3-day cycle. Day 3, you will commonly see a move into day 1 and day 2's trend. So we've got the week's trend, bullish trend, day 1, day 2, day 3, close up high on Thursday. So we've got volume up here. So we've got traders anticipating a move higher, only to potentially run into a trap. The market pull away with haste away from this trap to the downside, breaking support structures on the way down. So that's what we're looking for in sterling yen. The daily, the average, true range average is around about, what is that? Pips. Bear with me. Around about, if I can pull it up, 200 pips. So we can go to the daily chart and look at that. It's around about 160 pips. So 160 pips would bring us down to around about here, 182, 182.15. But while we're below here, I'm figuring we may as well target into this order block to the downside. So potentially see a complete machine gun fire to the downside. So how that might play out, so we've got Asia opening up, coming up into resistance. Maybe we'll get a sell-off in London. It could be quite an aggressive sell-off. Some consolidation, maybe a pump up in New York, and then a final push to the downside, potentially. So essentially we're looking for opportunities to sell high or sell the continuation as high as we can in a broken down market for the New York session. On London, you'll be looking to sell up high. With dollar CAD, we are still in a bullish trend. We haven't broken the swing low, and we are day 2 of the 3-day cycle. This was day 3. We've got a move up. So day 3 turns to day 1, day 2. So day 2 could be a continuation in line with the dollar strength thesis. So we've got a bullish trend still intact. So what we could see pan out is a correction and then a continuation. 4-hour chart, we can measure the Fibonacci. You can barely see it there because I've darkened it. So a correction to retest the 38.2 that has a confluence with these highs and this value gap between the close and low. Into here, a deeper correction will take us to 50% mean reversion for a continuation to the upside, targeting around 134.70 and higher for the highs. So we're looking for the day 2 continuation of this peak formation below, heading higher. Cable has been pretty much sideways all of this week in this channel, creating had lows down here that were taken out at stop pump, which eventuated in a move up. We took out these stops that were being created throughout the week up high, so they've been swept, and we've had a subsequent drop. We've moved down, breaking out of this territory on the backside of that trend, and the bias is to the downside, and continuation, the momentum in this market. We've got prospects of a pullback, and we can measure that on a 4-hour chart. So here we are on the 4-hour chart. I'm going to measure this Fibonacci scale and identify that we could be moving back up into test territory within the range again, and we'll be looking for the subsequent rollover from there. So that's the impulse, looking for a correction, and then the downside continuation to potentially take out last week's lows to finish up the week on the back foot in terms of cable. So day 2 continuation thesis to sell up high. $125.90 as a target to test these lows. And in the money over here, in the money longs. Okay. So looking at the Australian dollar, it remains in this bear trend, and we're looking for a continuation to the downside into this potential demand area and that wick low. So we've got this area, 64.80s, 64.50s to target on the downside. We've had that impulse, we've had that break of structure, we've got a lower high. So this was a weak low, this is a strong high. Coming in to test this strong low down here. On the 4-hour chart, we can measure this bearish impulse that took out structure there. It's so far yet to take out this potential strong low. It's responsive for that high. So 64.90, it tested 65. The figure is what we're looking for. We might need this correction as the dollar sells off at the start of the day, start of Friday. We've got a 38.2 target of 65.50-ish, and we'll be looking to sell high for the downside continuation. Noting that we've broken that structure there. It's currently acting potentially as support as the market moves up. Okay, so this will be day 2 continuation trend, day 2 of the 3-day cycle. Dollar yen, this bullish trend has got breaking out of last Friday's highs, but the breakout on Monday. Is that right? Let's have a look on our chart. So we've got the breakout on Tuesday of this week. Alright, so yes, there were longs coming into the market on Monday, but we didn't officially break any highs until Tuesday. So but we can count that. We can count that as longs in the market. So we've got 1, 2, 3, 4 days of longs in the market. Officially, as the per break of structure, we've got 1, 2, 3 breaks of breakout traders. 3 days of breakout traders initiated on Monday. So that's interesting information. A lot of length in this market for a sell-off for Friday. Already starting to see the market come off, and we are pulling away from last month's highs. So last month's highs, we're fading at last month's highs so far. It's not to say that we can't move up for a retest. The thesis is to be selling for the day ahead on Friday up high. Now, I'm in anticipation of a move down to retest these highs, and in doing so, we'll be forming a box. This box here, the price coming in, potentially consolidating, do whatever it's going to do over the next session or so, but we will be in a box, and should put a high on that. Therefore, if we do consolidate and break out to the downside in line with the bearish thesis, and measuring this box, we can get a 100% measurement of the range to come in or a 150 or a 200% lining up with this prior high and last week's high. So a 50% range expansion target here somewhere, these lows, and we can marry up structure along the way down, and so forth. If we were to measure the range, the rally, the bullish trend That's the high. We can identify that 38.2 is around 143.60, 143.20, the 50% mean reversion, coming right down into 61.8, 142.20, 142.80, sorry, 142.80. Is in and around this area. So this is noteworthy for targets on the way down. And we are also at day 3 of the 3-day cycle count. So everything is stacking up the prospects of a sell-off. So a breaking structure in Asia, in line with the thesis, break that higher low here, breaking at the moment on the hourly chart. So it's still broken down market. Testing it currently. So you can see the price action a bit better there. So that's the thesis. Sell off to the downside. And we're just going to have to wait and see how that presents itself in terms of market structure, price action. Got an information forming at the moment, topping pattern. Once we come up again, for the capitulation in New York. Now, note that this is counter dollar strength, but the DXY index is only weighted to around about 16%, I think it is, or less, versus the yen. It's mostly weighted against the euro. So regardless if the US dollar is strong, we could have a scenario where yields tail off, which would assist the yen to rally. We can have a risk-off theme. It's potentially both rewarding to the yen as well as the dollar. So we're sticking with our day 3 bias to the downside. With the US indices then, we're on day 2 and we are looking for the continuation, so we're getting the typical textbook pullback before the prospects of a move lower. And we have last month's lows as a target. Same scenario for the US 30, 38.2 marries up with these highs or thereabouts. The target area for the capitulation of the bulls to come in to target last week's lows. So that's the US 30, 32, downside continuation. Same for the S&P. Day 2, continuation to the downside. Right, dollar Swiss is pretty convincing. We've got this bearish wick that could be filled on Friday, and that presents a push up to short into. If we pull the Fibonacci onto the bearish trend, we've come up into a 50% mean reversion. Last week's highs holding lower highs in May, pretty much. It seems a little bit sluggish on this upside correction, so it just looks as though it wants to roll over on the daily chart, and we are on the day cycle, 3-day cycle, day 2. So day 2 is a continuation of the day 1 sell-off. So we've come up high into the origin of that sell-off, acting as resistance. So this has the prospect of a move lower for Friday. We have a swing complicated market structure, this one. Well, the structure for me is around about there. To break out, and down to the 15-minute chart. Now, the actual origin is down here. So we're yet to break structure here, but that's the key structure down over here. If that goes, then machine gun fire all the way in to the lows potentially. In fact, to come right into the 1-minute chart to look for structure, this is in and around 87.50. Potential support structure. And on the Fibonacci scale, with 50% mean reversion of that move today comes in at the 87.30 level. So that appears to be a very important level. It also acts as support over here as well. Okay, so day 2, continuation to the downside. So yen pairs are day 3s, so we're looking for the long squeeze. The 1-hour chart, talked about this over here on Thursday. So we're now looking for the capitulation finally. Euro yen really could get it if the dollar continues strengthening. Dixie, given the heavily weighted basket to the euro, and we're looking for euro yen to blow off at some point. We are still front side, however, of the bullish trend, so we're waiting for confirmation as the market decelerates, breaks down, and hopefully gives us something for the upcoming sessions. So all yen pairs are day 3. So Aussie yen, for instance, day 3 as well. Still front side of the trend line. We've got this support structure, 94.17 that needs to break. Currently, unless we see a fresh high up here and structure being formed at new higher low, it breaks down. But at the moment, we need to see this break over here. What we could see is a move up, as we're seeing, potentially up, maybe a lower high. Who knows what's going to happen, but looking to sell up high within what could be this range. Ideally, we want to sell at least a premium price. See how that pans out. And then finally, the New Zealand dollar is bearish trend. It's on day 2 of a continuation. Sights on night of 59.84 on the downside. And then this over here is a potential demand area. That was the cause of all of that uptrend as it came out of consolidation. Broke the market down here. This is the pump up for the dump. So targeting into this area. And on day 2 of the 3-day cycle for a continuation. We may see a correction up into the shorts. Might be short-lived. Potential resistance. So right up in here, 60.50. Potential resistance as well. Better. If you're going to do it right, do it right. Okay, so that wraps things up for the watch list for the day ahead, Friday. Thank you for watching, and if you've got any questions, let me know in the Discord or on YouTube. I'd be happy to help, and good luck.